Definitely. On to our discussion today, matters to do with interest rate. I told you these particular figures are very critical. We were looking at 10-year difference. This is almost 30 years ago and how that has changed. But CBK has a very interesting data set that is right there on their website if you want to check. And we'll go specifically to the year. The year is 2020. Have passed. Yeah, I know it's a little bit, it needs a lot of zooming right there. But you see, January, in that regard, we saw in January 2024, remember that classification that I showed you in regards to deposit, savings, lending, and overdraft. Where you need to pay attention is this savings and lending difference, which is quite crucial. But when you look at this figure so far, the year 2024, from January, you can see the deposit lending rate has actually, interest rate has been going up slightly. When you look at the lending rate, it's moved from around 15, it went to 16, it's still at 16. So as much as the central bank rate has been going down, this figure has almost remained constant. That is for interest rates for loans at the end of the day. And for deposits, that figure from January, 3.9%, it's actually been going up relatively. We can't say whether it is in close proximity in that regard. But with that said, we have one of our very own experts here from SIB Bank, Stella Sakwe. Thank you very much for making time to talk to us. CBK governor is concerned that they are reducing the central bank rate. They're saying inflation is going down, but our interest on our loans by commercial banks, actually, it's not going down as it should. Why this disconnect? Should there be sort of uniformity when one drops, the other drops, and vice versa?
Yes, in an efficient market, it will be automatic, all other factors constant, that when the central bank cuts the CBR, we have lower lending rates. And actually, that's the policy intention by the CBK. But you find that we have very many other factors in consideration. We have, for example, the risk-based model, which has been adopted by most commercial banks by now. We have other charges when it comes to loans. We have government levies, we have legal fees, we have insurance. So when you compound all these other factors, it deters or hinders the automatic decline in loan rates when we have a CBK cut. So that is when you see the necessity of regulatory oversight, so that it bridges the gap between now the market behavior and the policy intentions of the central bank.
Definitely. And you guys call that transmission. When you set CBR, it needs to transmit and change the rates. But this discussion, because I know tomorrow is the State of the Nation address, so most likely they are not meeting tomorrow, most likely Friday. What do you anticipate from this meeting? Is everyone going to take a hard stance? Because you're saying, based on other factors, it seems banks have a difficulty in reducing lending rates in commensurate with the reduction of the CBR.
Well, it's a tough balance, in my view, in that as much as the Central Bank of Kenya wants to push down rates on lending, it will be a different story with banks, because we are dealing with a very subdued economic environment, very high non-performing loans. So it needs for the banks to be cautious and to lend cautiously, and lending cautiously involves the bit on risk-based modeling, whereby they have to consider your risk as a borrower and feed that into your rate. So it will be difficult for a bank to lend to a risky borrower at a lower rate as envisioned by the Central Bank of Kenya, and then this will automatically lead to maybe more non-performing loans for the bank in question. So I feel like it's a very tough balance, and it will require a very tactical way of doing so to make sure that we bring down rates and make sure that banks do not undergo or book so many non-performing loans. But then this will also be complemented by other factors like economic thriving of the economy, in that when we have a thriving economy, businesses are doing well, we have good demand from our consumers, then we will have less non-performing loans. So when the environment is less risky, the business environment, then it will be possible for banks now to downgrade or to have lower rates for their lending.
Okay.
Yeah.
And speaking of riskiness, I mean, it seems it favors the regulator at large, because they are government at the end of the day, and we've been seeing banks being very cautious, lending to the government heavily. In fact, a lot of credit is going towards government borrowing, which is very interesting, because you have to balance the interests of developing the economy vis-a-vis playing itself. And it seems to be where we have sort of at loggerheads between the commercial banking sector and what is going on in the economy. SMEs are saying we're not getting this money. Banks are giving money to the government is having nice returns. I mean, how do we get ourselves out from such? Is it a long-term project trying to create an enabling environment, which I know it's not as immediate as it should?
Yeah, so with regards to government securities, we are also seeing a very fast decline in the rates, and this has been entirely or largely because of the central bank rejecting expensive bids from banks. So the largest winners are not necessarily the CBK, but banks. They're the ones who are booking gains. But for the central bank, I feel like, again, it has different roles, because the central bank is the regulator, and it regulates banks and wants to ensure that banks are thriving and the financial system is working. On the other hand, CBK is the fiscal agent who has to ensure that the government gets money in terms of borrowing, or it achieves its borrowing target. So on one end, it has to ensure that we have money as a government, and on one end, it has to ensure that banks are thriving. So with regards to crowding out, because that's what you're referring to when you say that banks are lending more to the government and less to the SMEs, I think there's a brighter path now. We can see light at the end of the tunnel, in that when rates go down on government securities, probably banks will lower their rates and now look for SMEs to lend to them. But looking at businesses right now, I was interacting with someone from the manufacturing sector, and he was saying that no business right now in the manufacturing sector would go to a bank to ask for money to borrow because of the rates. Because looking at their margins, and there is a lagging effect, for example, in the manufacturing sector, because maybe the items that they imported 3 months ago are still in stock, there's that lag. So probably what they imported was at a higher import cost, and then the margins will be lower. So going to a bank to ask for money with the very high rates means that their margins will go lower, or even the businesses will make losses. So there's that issue of banks lending cautiously, as well as businesses not going to banks to borrow money. So there's the issue of capital. And if we have lower lending, lower interest rates on government securities, then banks may be motivated to go to the private sector and try as much as possible to lend money to this sector, which may be having attractive returns as opposed to lending to the government.
It seems banks are between a rock and a hard place.
Yes.
Only time will tell how these navigate. Thank you very much, Stella.
Thank you.
All right. Stella Soke is actually from SIB, and she's telling us that only time can predict, but it seems the way things are, rates at government securities are going down, where banks have been lending so much. Now they have to come back home, go ground, and lend to normal businesses. But the question is, businesses again in this environment, a little bit risky. So how do they navigate that? Quite an interesting discussion, even as we head towards the State of the Nation address, with some of these economical challenges are expected to be addressed by the President, of course, the National Assembly. But so we put a full stop to today's show. Thank you very much for joining with us over the past slightly around half an hour. My name is Noah Kipkimboy. Up next, we have Mbio KTN. Stay tuned. Thank you, Stella.